Big news out of China again, and this should be really good news, right? China eases zero COVID restrictions in victory for protesters. That's from the New York Times. And one would think that Chinese stocks would be up and green and rallying, but instead it's quite the opposite. NIO right now down almost 5%, for example. Now the reason might be that we also had some quite disturbing data coming in last night. So exports year over year for China are down -8%. The consensus by analysts was -3.5%, and imports even worse, -10% actual. The consensus was -6%. So you can see that Chinese economy is really indeed not doing that well right now. But this may not only be an issue of the Chinese economy because of the COVID zero policy, and that's being lifted too late, but also, of course, the Fed policy, which the goal was always to kill demand, and that seems to have happened. If the exports from China are down as much, that means there are not lots of global buyers for Chinese goods, and that may well reflect the state of the global economy instead. And so we're seeing this big down day in Hong Kong Stock Exchange despite an early good start actually, but then it seems like we are really rejected from this trend line here. And so that really begs the question whether or not this was the obvious trade now to sell off this huge rally, take all of the profits out of Chinese stocks again, and whether or not this was actually the end of this rally up until here. Funny enough, there's something similar going on in the S&P 500. So you see also this trend line here, and it's everywhere on FinTwit. People are pointing out like how we always have peaked around here and then got rejected, and maybe a new big leg down from here, question mark. That's at least the consensus overall here. But I think there are some interesting things here going on. For example, the bond market, where the 10-year is getting a bid right now. So the bond yields are actually going down. That's usually good for, let's say, technology company, as the interest rates that are used for the discounted cash flow models are actually coming down. And so that should actually be good news. Similarly, oil being down big time here, and that's sometimes an indicator for whether or not we're going into recession. And additionally, the US dollar is also down today and indicating weakness and a longer trending turnaround of the US dollar strength here. So this gets me to think whether or not the current sell-off is rather healthy today, and maybe not really indicating a rejection of those trend lines that I've shown you before on the HSI and the SPY. For example, tomorrow we'll have jobless claims coming out, and they might be indicating a weakening US economy. Additionally, on Friday we have the producer price index year over year, and that may also indicate the US economy doing less and less well. And what does it mean? Well, it means that in the next Fed meetings, maybe there is even more pressure on Jeremy Powell to be less hawkish and end the rate hikes, because for now it is unclear how far we have progressed into a deteriorating economy globally. In China, it's quite clear already, but the indications of these data points that came out today would indicate actually that's on a global level an issue. And so all of this could actually have an opposite effect that one would think of, that namely the Fed would be forced in actually stopping with the rate hikes. And I think the probabilities have, in the recent months never been better leading towards this, and are more skewed towards the side that actually the Fed has overdone already, or at least needs to pause for some time with those rate hikes. And that might actually be good news for the stock markets. And that's why today I've decided to pick up some of those Chinese names that are smaller caps, but I've outlined a different strategy there in this regard, because there are delisting fears associated with that. So look into my Patreon if you're interested in that strategy and how I'm doing it. I've just published it in the Patreon community, so that's for the $10 tier. But we'll see tomorrow and Friday and also next week with give more data points, whether or not there will be more weak data for the economy in the US and globally, and whether or not this will actually mean an end to the rate hikes. And if that's the case, possibly a rally in the stock markets, for example, the Hong Kong Stock Exchange to continue its rally, as well as the US having sort of a relief rally, anticipating a less hawkish Fed. We'll see. Let me know in the comments if this is your opinion as well. And then thank you guys for watching. Please share and like, and see you in the next one.